The Trump trade war is having a global impact on the economy. So the group's new forecast now calls for 2.9% growth, down from 3.1%. Doug Flynn is here, certified financial planner, co-founder of Flynn Zito Capital Management. The OECD, another one of these global groups that President Trump has a lot of respect for. He's a big fan of those globalists. Oh, no?
Loves those.
What do you make of this forecast, though, in terms of everybody's trying to project what these tariffs are going to do, but nobody seems to know what's actually going to happen?
Yeah, if you don't know, one, if the tariffs are going to stick around, and if they do stick around, at what rates they're going to stick around at, it's very hard to make these forecasts. But nonetheless, they're making them, and they're scaling them back because they're saying, like most of these studies, if you only get the tariffs and you include that side of the ledger, it's going to knock down GDP, and this is just another one saying that, and probably increase inflation, those two things. Most of them come in somewhere in around 1/4 to 1/2 point lowering GDP and 1/4 to 1/2 point raising inflation. That's a common theme across all of them. But in many of them, including this one, it doesn't really weigh in the positive impact that perhaps some of the pro-growth policies that, if they ever get to them, would actually improve on the other side. So one day we'll get over this, and then we'll get to some of those things, and then they'll have to revise their estimates back upward. I think that's how it's going to
Maybe it takes another turn, as we said earlier, and Trump and Xi Jinping hop on the phone together. We'll see. But I want to ask you about two American companies that are in the news today, very well-known companies. One is Disney. The second is McDonald's. Disney's cutting jobs here, laying off hundreds of employees. What would you say, or what would be the takeaway from the announcement from Disney?
Yeah, the interesting thing about this to me is the targeted nature of the cuts. They're not cutting teams, they're not cutting back overall, but they are cutting people on those teams. And so they might be in marketing or corporate finance or other areas. And it's all part of the sort of management trying to execute on both spending better on content and getting their costs more efficient. They need to do that. And it always comes back to the fact that, you know, Bob Iger made $41 million last year, so we need to keep those things intact, of course. But, you know, overall, the stock hasn't done anything in 5 years, although it's moved a bit in the last month on the anticipation that perhaps finally some of these things are working. They have a lot of work to do in theme parks and other areas, but always cutting back people at your firm does things positive for the stock as it lowers costs, because that's typically some of your biggest expenditures. That's what's going on there.
Now, McDonald's, you get excited when they bring back these items. I know you're a big McRib guy. That's sometimes the announcement, right? But now it's the snack wrap. They're bringing back the snack wrap. But what stands out, I think, from the commentary here is they did say what they've noticed. A lot of people are not going out even to McDonald's anymore, eating at home more because of inflation. So quick word on McDonald's.
Yeah, I mean, McDonald's also has its challenges because I haven't been there in a while, but from what I hear, getting out of there for a small family is not cheap. You're not getting away as cheap as you used to. So people are saying, if I'm going to spend all that money, I'm going to spend it in another way. And so the McDonald's is definitely feeling it. And so they're trying to do things with bringing back other types of value meals and also creating some buzz around the McRib and these other sandwiches that people seem to love for whatever reason. And so maybe that helps them across all their franchises. And that, they need to do that. They need to keep driving people back into the store. And they need to get more creative on their ads. You know, other companies do a much better job at that and driving people in.
That's interesting. All right, we gave you 22 extra seconds there past 4 o'clock to talk about McDonald's. Thank you, Doug. There's the closing bell.